Hi everyone, welcome to my YouTube channel. Today we're going to talk about Q3 results of RioCan Real Estate Investment Trust. It's a Canadian REIT and is one of Canada's largest REITs. The company owns, develops, and operates a portfolio of retail-focused and increasingly mixed-use properties located in busy areas in Canada, where Canadians want to shop, live, and work. There are several reasons why we are focusing on RioCan today. RioCan's current distribution yield of 5.1% make the REIT investment very attractive. The 5.1% monthly dividend is supported by the best-in-class adjusted fund from operation payout ratio. The lower payout ratio means the safer the distribution, and there's organic cash flow for the business to grow, which is always nice to have. The REIT's ambitious development pipeline is adding high-quality assets to its portfolio. With a long-term strategy and the execution from its management, we expect to see RioCan's quarter financial strength to get strengthened again next time. RioCan took a big hit as the interest rate rose in the last 2 months. The stock has moved to its rare discounted territory. With the current price over FFO, the current unit price offers a very reasonable entry point. With that in mind, and what we're going to see in the next quarter, we expect to see a 26 premium to the current price. The properties in RioCan's portfolio are located in Canada's largest metropolitan areas, focused on the population, density, and economic activity. More than half of RioCan's assets are located in the Greater Toronto area. The remainder of RioCan's properties is concentrated in Canada's next 5 largest metropolitan areas. In this strong market, RioCan enjoy in-place occupancy of over 96% with a strong demand to release. Strong occupancy and diverse, well-curated tenant mix have led to a same property NOI growth of approximately 3% year over year. RioCan's portfolio is comprised of 198 retail and mixed-use properties, with an aggregated net leasable area of 35 million square feet, including office, residential rental, and properties under development. We expect to see additional 70 million square feet leasable area added to the portfolio upon the development completion. The trust adapts to the ever-changing landscape and incorporates future trends and growth patterns in its strategy and operations. The trust has evolved its tenant mix to better suit community needs, make its tenant mix more synergistic in the evolution of e-commerce, increasing traffic to its mixed-use centers, and increase the growth of its portfolio. As you can see, the majority of its property are comprised of necessity-based tenants, such as grocery, pharmacy, liquor, personal service, and more. As you can see here, there are many big names here. We have Costco, Walmart, Loblaws, Sharper, Canadian Tires, BMO, Scotia, TD Bank. All these tenants have strong business sustainability, and they do expect to be a good tenant in the long run with RioCan's property operation as well. With its high-quality necessity-based retail revenue and the strategy RioCan management has executed and implemented, we currently seeing a 97.3% committed occupancy, which is very high for this industry. And we're seeing 86.4% for the strong and stable tenants. Less change means less fee, means a stable cash flow outcome for the business. With all those being said, let's take a look on RioCan's stock performance. RioCan REIT has a stock price of 20.35 on Monday, November 7th. Due to its strong Q3 result, the stock has risen 3.4% on Monday as a closing price, which is pretty good. So as we can see that RioCan currently has a market cap of $6.29 billion, which is huge. And it has a PE ratio of 10.88, which we don't really take this into the analysis consideration. And with a forward dividend yield of 5.18, whoa, it's getting better than expected earlier. And the 1-year target estimate of 24.25, which is better. So we imply there's a 20-ish% upside from here. So based on the analyst report, we've seen that there's a 26.94% upside from today's date. And if everything goes well, we should see this price within the next 12 months. However, this does not mean that you're going to buy this REIT as your investment. Please do your own analysis and think thoroughly. So the Q3 2022 highlights, we have 3.2 million as net income, 182.5 million as operating income. Within these two metrics, we don't really care about the net income as the REIT normally sells and buy the assets. All those gains and losses does not mean that it has a healthy cash flow. So we are going to focus on the operating income as this is organic cash flow for the business. And all those dividends are attractive to us are from this income source. With a 44 cents FFO per unit, we are seeing a good stable business income here. It's better than previous quarter, and 5.1% for the SPOI growth, which is very good to see. As the RioCan stakeholder, what we are interested is that what the business is going to bring to us. So based on RioCan Skyline, they are claiming that they are going to have 4 to 5% distribution yield, which is what they have right now. They're going to have a 5 to 7% FFO growth, which we'll see later on, and overall return for the stakeholder is 10 to 12%. Of course, that 10 to 12% is going to really broken down into the distribution yield, the same property net operating income, and the 2 to 4% development and investment fee, and that combines give you the 10 to 12%. Now let's see if the quarter result will really tell us that the company is intact on the objective. So here are the metrics from Q3 2022. So 5-year target 3% for the same property net operation income growth. And we have 5% down for the Q3, which is very good to see. Status green, perfect. FFO per unit, 5% to 7%. And now we have year to date $1.13 for the Q3 result, which is very nice to see. Green light. FFO payout ratio, as I mentioned earlier, the lower the payout ratio means that the distribution is safer, meaning that it's more sustainable and the business is able to last as well. So with that 55 to 65% target, the actual payout ratio is 57.7, which means that it falls into the guideline and we are good to go. It's also a green light. Development spending, there's actually tons of research we need to go through to talk about the development spending. We are going to skip this for now because otherwise this video is not going to be long enough to talk about the details. But at the end of the day, 343 million, considering that we have the inflation and supply chain issue in year 2022, is actually pretty good. So it is a green status, which is very good to see. So RioCan has a robust portfolio fundamentals. The strong FFO per unit, meaning that it's able to provide more return to the stakeholder. Same thing for the SPNOI growth with a 6.6% Q3 2021 versus 5.1% on the Q3 2022. It's a bit lower year to year, but to be honest, I am not going to say I'm unhappy with it, considering that all the external factors and the global challenge we have seen these days actually a pretty good result for the REITs already. So I'm gonna pass on that one. So at the end of the day, there is positive trends in the occupancy for RioCan properties. Remember, REITs is the real estate investment. As long as the occupancy remains high, meaning the business stays healthy. And we are happy to see that throughout the quarters, the occupancy of RioCan's portfolio has been increased by a few percentage till 96.7% Q3 this year, which is very good to see. So high performance growth oriented portfolio, like what do you expect to see the income increase? There's a couple of things we can do. Well, the most basic one is that increase the rent. So the average net rent per the square feet is listed over here, 3.4%. Like if it's before 2020, I would say it does beat the inflation, but with those high inflation rates in place, I don't know if this is gonna be very good. But to be honest, less stress for the tenants, better health for the company. I'm happy to see the organic cash flow to keep going like that, so I'm okay with it. So happy to see the Q3 result with a higher net rent per square feet, but not too outrageous for the tenants, so they cannot afford and eventually will lose them. So that commitment level may drop. So the other day, are we going to buy RioCan? It's really subject to your own discretion. I'm not really a financial advisor. Please don't take my word for it. I'm really just here to show you what the Q3 result is like. At the end of the day, I think it's pretty good. I am going to buy more, just really nibble some shares. I already have a open position in this company. I'm not going to add too many at the end of the day, but I do think that this is a very promising company to have. Okay, thank you. If you really like my video, please follow and subscribe. I really thank you for your support. Enjoy. Cheers.